And welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. Thank you so much for coming in today.
Glad to be here.
All right, a lot of people have a lot of financial questions based on this segment here on Ozarks Live. People are always asking Bruce questions, but today we're going to talk about 7 topics that you get asked about over and over again. If we don't hit them all, we're going to continue this down the road, but let's start with one.
That's right.
What about capital gains? Talk a little bit about that.
Capital gains. Let's talk about long-term capital gains. If you're in a 10 to 15% bracket, there is no long-term capital gain percentage. If you're 25 to 35% bracket, capital gains is 15%. If you're at 39.6, it's going to be 20% of gains on your investment.
Right.
Now, collectibles, and I'm not sure how they would classify a collectible or what it would be, but long-term capital gains on a collectible is 28%. Unrecaptured depreciation is 25%. So capital gains is an additional tax on gains on appreciation of an investment.
Right. So when you go to sell that stock, keep in mind that some of that money is going to need to be used for capital gains,
That's
depending
exactly
on how long
right.
you've had it and your worth and all of that.
That's
all right.
exactly right.
Jumbo CDs. What is a jumbo CD?
Jumbo CDs can vary by institution. Most banks will classify a CD as a jumbo at $250,000 or higher.
Okay.
Now, because interest rates have been low, they have lowered that down to $100,000. Some banks have. So if you have $100,000 or $250,000 in CDs, the idea from the institution was we're going to give a little bit higher rate of return on the jumbo status than we would on somebody with $5,000 or $10,000 in a CD. So if you'll bring a larger amount of money to me, it's a jumbo, and I'm going to pay a little bit higher interest rate. Now, what I found is that doesn't necessarily, in the environment we're in today, it doesn't affect rate of return that much. Rate of return has been so low that it's right now, it really doesn't matter what the balance is. You're going to have a very low rate of return.
Okay, keep that in mind if you're looking at CDs. Tax deferrals.
Tax deferral is, the way to answer that, am I going to get a 1099 on my investment, which is current taxation of my gains, or is it in deferral? Am I going to be taxed later? Like an example would be an IRA. An IRA, you put money in pre-tax, or you make a contribution that's deductible, but it grows in deferral and it compounds, which can be significant.
Sure.
And when you go to make a withdrawal out of your IRA, that's when you're going to pay tax. So the idea is that hopefully you're going to be in a little bit lower tax bracket later in life when you need to take the money out, as opposed to paying tax now in your earning years when you're in a higher bracket. So deferral is very important for compounding your growth and building your retirement account.
Exactly. Ask an expert about that
Absolutely.
for sure. Okay, a lot of people have questions about life insurance.
Life insurance, it depends on what your need is. There's whole life insurance with dividends and eventually has a permanent status and
Cash
it's
value
paid
at the
for,
end.
cash value, things like that. There's universal life that is basically term insurance with a side fund, whether it's fixed interest or a variable or an index, and you have a cost of insurance that goes up based on age every year internally, but your premium stays the same. Then your death benefit can either be increasing or level, so there's variations of that. There's term insurance, which is the least expensive.
Right.
It's used for a purpose. I need life insurance for 20 years until I'm got my debt paid, and then I don't need it anymore. Well, while you're raising your family, I would recommend some life insurance. Don't overextend yourself on a premium. Buy what you can afford, because that's a very important part of stability in your family. Mortgage life insurance, I don't recommend it a lot because it decreases with your mortgage and the premium usually stays the same. Your better option is to buy term insurance to protect that mortgage.
Okay.
So, and there's a lot of variations of life insurance, but we just try to analyze what the purpose is, and then we go from there.
All right, lots of people sending lots of questions, and we've got some we didn't even get to this time.
Yep.
That'll be potentially our next segment. All right, if you have a question for Bruce, email him at bporter@color10.com. He'll answer your financial question here on the show. Bruce, thanks very much.
Thank you.
All right, Ozarks Live will return right after this.